All right, let's get right into it. The crypto market just had an absolutely brutal night, and we're going to break down exactly what happened and, more importantly, why. You gotta love this quote from an analyst right in the thick of it. As of December 11th, 2025, 4 a.m., 6 espressos, these eyes don't sleep. I mean, that just perfectly sums up the intensity of a market that got completely turned on its head.
And boom, just like that, over $370 million in bullish bets got completely wiped out, liquidated across major exchanges like Binance and Bybit. It was just a tidal wave of forced selling that washed away anyone with leverage in a matter of hours.
And you can see the damage here. It was a sea of red across the board. Bitcoin actually held up okay, hovering around that 90K mark, but the altcoins, oof. The ones that were just starting to show some life got hammered. We're talking Solana down over 4%, Doge down over 5%, and Avalanche took a really painful 7.5% haircut.
So here's the crazy part, right? The market was fully expecting a party. The Fed cut interest rates. The stage was all set for a big Santa rally into the end of the year. But instead, we got the complete opposite. So what on earth was the culprit behind this massive reversal?
Well, it all came down to a hawkish surprise from the Fed. And really, it's not about what they said, it's about what they didn't say. The market got hit with what's called a hawkish cut, and yeah, it's kind of an oxymoron. They gave us the rate cut everyone wanted, but the tone, the commentary, it was anything but optimistic. It basically poured a giant bucket of ice-cold water on the rally that everybody had already priced in.
This really just lays it all out. The market expected a clear green light for more cuts, a dovish tone to keep the party going. Instead, what the Fed gave us was a flashing yellow light. They were giving all these conflicting signals and a ton of uncertainty about the path forward into 2026. And let's be crystal clear about this. This was not your average investor getting scared and panic selling. The data shows this was the smart money. We're talking professional traders, we're talking institutions who are strategically taking their profits off the table based on the Fed's new cautious language. So in a shakeout like this, who were the winners and who were the losers? Because even in a sea of red, there are always a few outliers that can show us where the capital might be rotating to next.
And this is where things get really, really interesting. While major layer ones like Solana were bleeding out, look at this. Cardano, ADA surged over 9%. This suggests there was a very deliberate rotation of money happening, with traders moving into assets they saw as having more value.
And ADA wasn't the only one swimming against the current. Hype token, which is tied into some of the more, let's say, degen DeFi protocols, also bucked the trend with a 5% gain. It just goes to show you that even when the broader market is scared, the appetite for those high-yield speculative plays, well, it's far from dead.
Volatility like this always brings up the big question. Is it time to be fearful? Let's take a quick pulse check on the market's emotional state.
Well, the sentiment has definitely tipped right into fear. We're sitting at a 29 on the Crypto Fear and Greed Index. All that optimism from just a few days ago, yeah, it's pretty much evaporated. We're getting close to extreme fear territory now.
But, as any seasoned investor will tell you, widespread fear can be a massive signal. It often means that the best opportunities are just starting to emerge. When everyone else is selling in a panic, that's usually the best time to start looking for quality at a discount.
So, if fear creates opportunity, where exactly is the smart money looking? Let's talk about the sectors you need to be watching right now. The biggest narrative that is gaining serious traction is real-world assets, or RWA for short. This is all about tokenizing things from the real world: gold, real estate, bonds, and bringing them onto the blockchain. It's about bridging that multi-trillion-dollar world of traditional finance with the world of crypto.
And look, this isn't some far-off crypto dream. This is happening right now. The entire nation of Bhutan just launched a gold-backed token. You have financial titans like State Street and Galaxy building tokenized funds. This kind of institutional adoption is a powerful long-term trend that you just can't ignore.
Now, at the same time, we have got to keep a very close eye on Bitcoin dominance. It's sitting at a really critical level of 58.6%. Now, for anyone who doesn't know, this just measures how much of the total crypto market cap is in Bitcoin versus all the other altcoins. When it goes up, that usually means money is flowing out of alts and into the perceived safety of Bitcoin. And here is why that number matters so much. A decisive break above 60% would basically act like a black hole.
It would just suck all the liquidity out of the smaller altcoins and could trigger a much, much deeper crash in those markets, as everyone flees to safety.
So, what's the final word from our analyst on the desk? What's the game plan for the next 48 hours?
It really feels like we're walking a tightrope. On one hand, you've got a potential landmine, the fear from Oracle's bad earnings report, and the stock market could easily spill over and hit AI-related crypto tokens. But on the other hand, you've got some serious rocket fuel. Gemini's new, fully regulated prediction markets are coming online, and that could bring a huge wave of fresh capital into the DeFi space.
And that right there, that is the crucial takeaway. This wasn't a retail panic. Like the analyst said, this was smart money selling to even smarter institutions. This was a calculated chess move. The whole structure of the market is being reshaped right in front of us. And as the ghost of 2026 starts to appear on the horizon, the real question is, are you prepared for the next battle? Don't get caught off guard.